Welcome back, Gold Bugs. Here's Sive Morten as usual from the ForexPeaceArmy.com, and we're talking about gold. So as usual in the weekend, we give a brief outlook of the fundamental report that we have prepared. So currently it seems that market's a bit coming down about recent collapse. So initially it was a lot of actually austerity around and hysteria that gold is just moving too fast and to the downsides, everything is over, we are doomed, and so on. But in fact, now investors are actually relaxed a bit, and in fact, as you can see, the retracement stance not as strong. In fact, if you take a look at the scale of the pullback, it's not even the 30% retracement based on the monthly chart, which is stand somewhere around 33, 34 area. Long-term charts for now are not actually useful for us because the potential setups that might be formed there are not coming yet in play until for nearest probably couple of months until the end of the year. So once again, we will be focused on the performance on the daily and intraday charts. Meantime, based on our analysis, investors right now are speaking about first retracement leg somewhere to 35 38 area. So that's the consensus forecast among the big houses who are speaking about retracement. But everybody, including us, suggests that major fundamental factors still stand in place, and gold just needs to adjust the overhype period where the market price has deviated too much from the fundamentals. So yes, driving factors exist, there's still support gold, but the value of these factors is a bit smaller than the current price level. So lots of component of the hype stand here, which has to be eliminated before the gold will start showing upward continuation. Based on fundamental picture that we have analyzed this time, we see that gold should keep getting support as from the weak dollar, as from the lowering of the real interest rates. Is based on the Fed performance and the situation in the economy, tariffs policy, and some other stuff. So next week we are particularly will be watching for what will happen in the Supreme Court, where this will be the session on concerning the Donald Trump tariffs. It should happen on the 5th of November. This might be the major event, especially if we will not get the pearls once again. So still, we suggest that the liquidity issue that we discussed yesterday in the Forex report, it also has meaning for the gold market. It remains as a wild card scenario, and we think that it's tail risk. It doesn't provide any hazard to those of you who keep unleveraged positions, especially, for example, if you're just accumulating the gold, buying the bullions, coins, or just keeping non-leveraged accounts on the gold. It's no hazard. Yes, it will be drawdown if the liquidity issue happens, but we think that for non-leverage accounts, that might be more an opportunity to get gold and increase the position at a really good price. For those who are keeping the leverage positions, the current situation with liquidity provides some dangers, and it's another reason to think about whether it makes sense to hold the position through the weekend or even through the overnight in the current circumstances, because it really brings some risk. So that's what about the fundamental background. Now, speaking about technicals, what we're gonna do in the next week, as I said, long-term charts provides not much information for now, and in fact, we're keep going with our bread and butter trade. So in the recent few sessions, we've got nice pullback. On Friday, we've got the retracement that we discussed, although it takes a bit different shape, but we do not care about it because we haven't considered any bearish scenarios there and intends to use this retracement just for taking long position. That's why we are not caring much how it actually has happened. On the full time frame chart, you could see the target of this possible trade. It stands around 41.90. This is just minimum target. We're not excluding the situation where market could try to move higher. In this case, we could get the big double repo sell pattern on the weekly chart, for example. But that's the level that we're focused on. As we suggested, around 40.55, 40.75 is confidence resistance, got is cheaper to sell, and the pullback indeed starts. On the next week, in the beginning of the week, keep an eye on the MACD. Here lines is coming very close, and the one of the patterns that we need to keep an eye on here is actually possible bullish grabber. So it might be formed somewhere on Monday. Because market right now stands around the support area that we have discussed, and appearing of the grabber here, it might be an additional signal for entry or confirmed possible entry. Gives more confidence that market intends to keep going higher, which is actually what we would like to get. On the hourly chart, there are a few things to keep an eye on. First of all, take a look that the OP target has not been completed. But for us, for bullish positions, I probably suggest that this is an advantage. Why? Because market will try to complete this target. It will be tending to reach the OP because it works like the magnet. Second is the shape of the retracement is clearly the ABCD, which just confirms that's probably the pullback. And market stands precisely at the confidence support area that we have discussed, 39.65, 39.85. Here's what we've got instead of the butterfly. Initially, we thought that this will be first the butterfly, completion of the OP, and then retracement, but we've got just 222 and retracement in the immediate action. Potentially and theoretically, even drop to the XOP, which stands from 39.42 and creates an agreement with the 39.47 support, it will be okay. So even retracement to the 618 support, it will not break overall bullish context. But of course, since we have the strong support here slightly above the area, we will be more happy if upper direction will be reestablished right from the confluence. Besides, on the follow time frame chart, MACD comes in place right in this area. So that's actually, as you understand, creates the overall idea of the plan. So we're watching for market performance around this level, watching for the patterns, what particular patterns will be formed. In fact, we already have this catalyst 222 buy, but maybe this market could flirt a bit, maybe forming some minor hand shoulders or something else. Keep an eye on the grabbers. Once we'll get grabbers together with the patterns, that might be just all that we would like to get. And potentially that might become an area where we could take the long position. So that's towards what we have. Let's see what will happen on Monday, and as usual on Tuesday we will discuss what actually the progress market has.